the block. That saw some rapid selling after starting a little bit in the green. And of course, Amtech Auto and Nitin Fire are continuing to see a goodish bit of selling every time they show signs of some green on the screen. Well, the list of stocks that are declining is outnumbering the number of green stocks. So that's a measure of the lack of confidence in the market at this point in time. 6 in the red to 5 in the green, and the lines have the way the lines have crisscrossed shows that the market has no confidence that it could continue buying, or that the bottom has been reached yet. Well, always wise to get someone who has seen many such cycles and who is a fund manager into the show. Let's welcome Nandita Parkar, the managing partner at Karma Capital, to speak with us. Nandita, good morning to you. Thank you very much for joining us. Are you buying at this juncture? Is it looking to you that stocks have reached attractive levels at all?
Yeah, I think if you look at the anatomy of the fall, I mean, it's largely macro-driven, right?
Yes.
And so there's almost 100% correlation in the stocks. They're all going down altogether. And so this does present a nice buying opportunity. I would say that, in terms of a catalyst, you were earlier alluding to the lack of confidence that people might have in buying. I think that once the Fed meeting is behind us, we will see a little bit more uncertainty out of the way, and that might give the market some succor in terms of where it's headed.
But since this is a part of a global tsunami, as it were, Nandita, is there anything in the global markets that you would look for, to clutch? Would you want for instance, the Chinese market to steady? Would you want the Nikkei to steady? Would you want any of the other bigger markets to steady before you start buying India? Or would you start buying India per se on its own valuation?
Okay, so I would say that India is a big beneficiary of everything that's gone wrong with China, right? And the commodity cycle. And if you look at the savings, in fact, that the government has had in the first quarter, these are very significant numbers. So the estimate is, in terms of the gain in, from an indirect taxes side, it could be 1% to 2% of GDP. Now, if this money is not hoarded by the government and actually spent over the next 9 months, that's a very big deal, and that's a very big driver of growth for the economy for the rest of the year. Secondly, if you look at real interest rates, and you have been one of the people who have been telling Governor Rajan that at this point we have real interest rates of 3 to 3.25%, where his own target was 2.25%, or something around that level. So there is plenty of room now for him to cut interest rates, and my sense is this will probably happen very soon after the Fed meeting. Once that is out of the way, from an India standpoint, we have this event to look forward to, and I think that will give also global investors a lot more confidence of returning to India, and I think that will set the ball rolling.
Nandita, hi, morning. But at the end of the day, India is a part of the global pie, and we've seen a global growth slowdown exacerbate in the last, say, 15, 20 days. Don't you feel that global markets could perhaps get into a bear market phase, dragging India with it? Because that's the fear that many people are now talking about.
Right. So, I mean, we've already seen the impact on our commodity sector of global growth slowdown, and also, but if you look at some of the sectors that are doing very well because of the currency depreciation, IT services, it's still standing, and I don't see a difference in IT spending, in the past 15 days from let's say 2 months ago. So there's no decline there. Pharmaceuticals, I think that story holds. Textiles, even given the depreciation again, along with the yuan, I think we're pretty much pari passu here. So I would not look too much at that. I would say domestic demand stay focused on that. Look at what's coming down the pike in terms of government spend. Look at what's happening, what will happen in January because of the pay commission, salary increases. Now the one pension, one rank scheme, more spending because of that. So I think at this point, India is in a really unique position globally, and I think really we should, take a deep breath and focus on that, and because it's something that I haven't seen in the past, 20 years of India really standing out on its own. So I think let's focus on that. And in terms of buy levels, somewhere in here, they're there. I wouldn't be able to point it out to you, but we're certainly closer to them than we were a few weeks ago.
All right. I'll just come to you for sectors or specific stocks that look attractive to you. But I understand you have a Karma Star product, which is a long-short India equity strategy, and you have a Karma Select, which is a long-only India equity strategy. In your long-short, what's your next short?
I won't be able to give you that.
Okay.
But I will say we have considerable cash levels, which we are deploying.
Okay. All right. In that case, where would you deploy it? Sectorally? If you can tell us stocks, fine. But would it be the auto ancillaries, which we were just discussing, looked so attractive some time back? People were chasing them, and now they're getting dumped. They are still higher on year-on-year levels. Would any of those, the Mothersons, the Bosches, the Amtech Auto, the Bharat Forges, would this be your area of interest?
So I'll tell you what, across the board, I'm probably going to go back and buy everything that I took profits in a month ago. And so as far as my thesis is concerned, in the stocks and the sectors that I hold, that hasn't changed. So whether it's autos, consumer discretionary, pharmaceuticals, IT services, housing finance companies, I think, these are the areas to go. What I would advise people to do is look at their holdings a little bit more closely, see if there's been any change from a fundamental standpoint, or is it just the sell-off that is spooking you, and then take this opportunity to realign your portfolio. So, if there's something iffy in Bharat Forge because of the U.S. trucking market, maybe reduce some there and add to something else that has fallen as much or maybe more, because, from a fundamental standpoint. And I think this is a great opportunity to do that, really question what you held. It's certainly shaken people investors out of their complacency. And so take a closer look and go back to good old-fashioned stock selection.
Okay, let me take two sentences that you said. I will buy what I sold just now, and I expect Rajan to have a lot of room to cut. So putting that two together, would private banks be any of your favorites?
Some of them, yes.
Okay.
Okay. Well, that was my question as well. What do you do with a stock like ICICI Bank now? Because over there, it's confusing whether it's bank related or whether it's the sentiment as a whole. What's your thesis?
Well, I really don't want to comment on one stock, but I would say one thing to you is that banks in general act as a beta on the long side as well as on the short side. And to that extent, their fall is completely explained by the amount of selling that has taken place in the market.
And do you play public sector banks as much as a beta play?
We have, in the past, bought public sector banks when we thought that things were on the mend. Where I sit now, I don't have that level of comfort.
So how much cash do you deploy at this juncture, Nandita? I mean, how much cash should someone deploy now?
I think gradually over the next couple of weeks, one should deploy as much as you can.
Okay. So you aren't seeing too much by way of a rupee depreciation from current levels?
Probably 2 to 3% more from here, not a horrendous amount, no.
Okay. So globally,
not where things are today. So, let me preface this by saying that the data that we have today, the information that we have today, leads us to certain conclusions. If there is a systemic failure somewhere or some event happens, then obviously one will have to re-examine.
Okay, fair.
All right, we leave it at that. Okay, you were saying? Okay.
I wasn't saying it.
Okay.
Great.
Well, I just
Fair
want to
enough.
ask you, would you... No, fair enough. You know, since you spoke about rate cuts, Nandita, would any of the FMCG plays be, one of those betas that you're looking for? You spoke about OROP, the one rank, one pension. You spoke about the 7th Pay Commission. Are these slightly long plays?
Yeah, as well as consumer durables, right?
Okay.
So the usual suspects that will, and the consumer discretionary, advertising is something that's doing very well already, despite of other sectors not doing well, because you also have the growth of the e-commerce companies. So they're providing a really nice buffer. So I think that really, I would get Governor Rajan to focus on being a little bit more growth-focused at this point. And I think that Arvind Subramaniam's comments should be taken very strongly by the Reserve Bank.
How will you play the expected rate hike from the Fed? Would that be an event that you would go short in emerging markets and then take a call after September 17th?
Well, I think a lot of the risk reduction has already taken place. I would say a substantial part has already taken place ahead of that meeting, and that's what we're seeing on a daily basis. So I think once that is behind us and you have the rate increase, there will be a lot more uncertainty out of the way. And I don't expect a series of rate increases. I think this will be a one and let's take a break.
All right. We also have to take a break. Thank you very much, Nandita Parkar.